How is your day today? This is Kings and Queen accounting class. We're here to serve you, making sure that your accounting improves significantly and that you master the craft of accounting. That's all we do. That's all we intend to do. All of our students, to make sure that you have it good. That's what we do here. So tell your friends, tell your neighbor. Kings and Queen accounting class, making it simple so that everyone can understand. We're back with you to look at part 2 of cashbook preparation. And we're now going to be implementing the concepts we would have spoken about earlier in part 1 of cashbook preparation. We emphasized on the use of the folio column. We spoke to the different types of discounts, and we spoke to as well bank overdraft. We also spoke to the concept of the rule in treating with transactions in the cash book. So first thing we're going to, as we always like to guide our operation with some objectives, giving us some focus, yes? And so we can measure to what extent are we answering these questions. Interpret the cash book transaction, record entries correctly, and balance off cash book correctly. So let's proceed with the first of our objective to interpret the cash book transaction. Here we have some transactions stated for you and for us to go through to relate to. So shall we begin? In the first transaction, it reads, Shellyan starts business by putting $50,000 in the bank. The rule we had shared in the first lesson is that the cash book deals with the movement of money. Yes, whether money is moving into the business or moving out of the business. All right. And we also indicated that when money is moving into the business, then we are going to debit the cash book. And when it is moving out of the business, we're going to credit the cash book. So let's proceed. So Shellyan would be the owner, it seems, started business by putting $50,000 in the bank. And the question we'll ask is, are we receiving any money in this instance? And the answer to that question is yes, because money is being placed in the bank. Money is being placed where? In the bank. So the bank account is receiving money, and so it would have recorded. So the accounts affected here would have been bank account, and of course, once we're referring to the business being started, yes, start business refers to capital. Right? So those are the accounts there. The second transaction says we bought stove paying by check. So what are we buying? We're buying stove. So stove is an account and we're buying it paying by check. And once we have check, it is going to be the bank account, right? The next transaction says we have cash sales. Yes, that means, simply put, we sold goods for cash. And then both would be accounts, cash and sale. P. Blake paid us his account of $400 less 5% discount. So he's paying us by cash. So it would be P. Blake and cash. deposit cash into the bank, cash and bank. Paid rent by check. What are we paying? We're paying for rent. What are we using? Check. So once we have check, it's going to be bank. Paid C Morgan on his account, $9,000, receiving 10% discount by check. So it's going to be C Morgan. And how are we paying him? We're using check, and so check is going to be bank. Shelly-Ann withdrew $500 cash for her personal use. Now, the two accounts affected, one is going to be cash. Note the information says that she is taking money for personal use, so it's going to be what we refer to as drawings. Drawings is the concept where the owner or proprietor has taken out of the business goods or asset for their personal use. An example of that is, let us say, Shelly-Ann is operating a restaurant, and Shelly-Ann decides that she is going to take perhaps one of the chicken that she has in the stove, has in the refrigerator, to take it home to cook for her family. The value of that chicken would have been a join. Yes, he's taking from the business for her personal use. In this case, she's taking money, right? She's taking money for her personal use. All right. The other transaction says we withdrew cash from bank for business use. Notice up here it was personal use. Now is what? Business use. So it is in between cash and bank. All right. Now that we have done the interpretation of the transaction, we can proceed now to make the recording in the cash book. But just before we do that, we're doing what is referred to as the 3-column cash book. The 3-column cash book. All right. So this is the double line that separates this side from this one. So we're going to, in the center, we're going to record cash book. And we are now going to be recording the headings. So this is date. Here is referred to as the details. And we have folio. This is discount. I'm using DIS for it. And we have cash account. And we have bank account column. Then we're going to have date again. We're going to have details. This is the folio account, folio column rather. And then we are going to have cash discount. So I'm going to put in that now. Or discount column. Right? And we have discount. I will have to move these dates, to facilitate the other columns. Okay. And so we have cash and we have bank. Okay. All right. Now, we're going to be entering the information in the cash book. And so what we're going to do again, we're going to be able to determine whether we are the transaction, from the transaction, whether we are receiving the money or we are paying out the money. All the time, if you just remember, and you really when you read a transaction, that you're to look whether or not the transaction is indicating if the business is receiving the money or the business is paying out the money. All right. So let's go. Shelly-Ann start business by putting $50,000 in the bank. Money is going in the bank. So is the business receiving money? Yes. So we're going to go to debit side. So when we are receiving the money, we put it on that side. When we are giving, yes. Let me So we're giving and receiving. All right. So the date would be October 1st. So it is October 1st. The accounts affected. Other accounts affected will be capital. It goes in the detail. So we have capital in the folio. Now, capital is a nominal account. Capital is what we refer to as nominal account. Let me pause to just share this quickly and permit me to erase this right here, because I'd like to introduce this concept since we're dealing with this. We have what is known as real accounts, nominal accounts, and we have personal accounts, right? These are the three types of accounts: the real, nominal, and personal accounts. Real accounts relates to assets, fixed asset, tangible things you can hold, you can see, like the desk, like the chair, like the computer, the machine, the stove, the refrigerator, the motor vehicle, the building. So that's referred to our property. Yes, real accounts deal with property. Now, once we're dealing with real accounts, their accounts is what would have normally been recorded in the what referred to as the general ledger. And so we use this GL to represent general ledger. The second is nominal account. Now, nominal account has to do with income or revenues, expenses. Yes? So when we talk about nominal account, we're referring to income, right? It's like your sales account and your purchases account. Those are nominal accounts. Your expense accounts such as rent, such as wages and salaries, insurance, stationery, all of those are expenses. Yes, your discount received, your commission received, those are also referred to as revenues. All right, so all of those accounts are referred to as nominal accounts, and nominal accounts also go to your general ledger, right? They are open in your general ledger, so they would be GL. Now, accounts relating to your personal accounts now speaks to your debtors and your creditors, or what we now know also as accounts receivable and accounts payable. I have done that class previously when we looked at how to manage accounts receivable and accounts payable, right? They are personal accounts. So personal accounts relating to debtors and creditors. And these, for debtors, we talk about the sales ledger, SL for sales ledger, and for creditors, we talk about the purchases ledger. All right? So, in the cash book, we're coming back to cash book now because it's very important that you know what to be placed in the folio column. Critical that you understand the folio column, the reference column. Yes? Now, the folio column, yes, we are now going to indicate where this account will be found, right? Capital is a nominal account, and therefore it will be found where? In general ledger, right? I don't want you to miss that, right? So capital account is a nominal account, and therefore it will be found where? In the general ledger. So in the folio we're going to have GL. All right? Let's continue with the transaction now. So we would have now do what now? It's 5. It is place folio. You know, it was by bank. So we're going to put it in the bank here. We put the dash here just to make sure we don't record in the wrong place. So those are just like placeholders. $50,000. All right. Then we bought stove paying by check. Right? We are buying. Is the business question is, are we receiving money or are we paying out money? Look at this transaction. We are buying stove, paying by check. Are we receiving money? No. What are we doing? Paying out money, because we buy the stove and we pay out the money to get the stove. So it is by check. So once we are giving the money out, we're going to be recorded on this side. So we're going to have the date, which is October 2. Yeah, it's the 2nd of October. The name of the other account is stove. Yes, which is an asset. Now, stove is an asset. It's an asset. And remember we said that the real accounts deals with assets, particularly fixed asset or tangible assets rather. So stove would fall under the category of what? Real account. And real account is open where? In which ledger? The general ledger. So we'll have GL. The amount of money, it is by check. So we're going to put the money here, which is 1,400. Let us move on quickly. October 3rd. October 3rd, we have cash sales in October 3rd. What that is saying is, are we receiving money? We sold goods for cash. When we sold goods for cash, when we sell goods for cash, are we receiving money or we're paying out money? Almost definitely when we're selling, we are receiving money. So if we're receiving the money, it's going to be on the debit side. So it will be October 3rd. Yes. And we have what now? Sales. Now, sales is a nominal account. And nominal accounts are recorded where? General ledger. And the amount of money is 10,500. So it is cash, 10,500. Okay. Let's go to the next one. And since we have erased the date, I'm going to check now. We paid Blake. P. Blake paid us his account of $400 less 10%. Which date is that now? Blake is it the 5th? So it's the 5th of October. So Blake is paying us. Let's look at it again. Blake paid us his account of $400 less 5% discount cash, right? So if he's paying us the money, then the money is going to be coming to us. We are receiving it. So we go to the debit side. So it's going to be October 5, right? And who's the name of the person? P. Blake. So write it here. P. Blake. Now, what do we put the folio? Is P. Blake a real account? No, because that deals with assets. Nominal accounts deal with income, expenses, and revenues. Is P. Blake an expense account? No. Is it a personal account? Yes. But he's paying us. That means he owed us. So it is SL, sales ledger. Alright, did you all get that? I hope you all got that. He is paying us because we would have sold to him goods on credit. That's the only way he would have paid us. Alright? And if we had sold goods to him on credit, then it is a credit sales. And credit sales are recorded in the sales ledger. credit sales are recorded in the sales ledger. So we would have sold goods to Blake on credit. So Blake would have been receiving goods from us on credit and is now paying for it, right? That's why we have SL and not PL, right? Because we have sold him goods. That's why he's paying us, all right? Now, the second part of that is that he's paying us, and because he's paying us on time, we are giving him 5% discount. 5% discount, which means that it is 400 times 5% over 100, and that is going to be $20. Right? Right? Those of you who know the math, to calculate, 5 4 is 20. Okay? So it's $20. So the discount we're giving him is $20. So if we are reducing the amount by $20, how much then would he be paying? We're going to subtract the $20 from the 400, and it will be 380. So we write 380 because it's by cash. Next transaction says that we deposit money. The date here is the 8th. The 8th would have put it 8th of October. We deposit cash of that into the bank. Now, this is what we had said in part 1 of our cash book preparation, that contra entry is where we're moving money from cash to bank. This is a contra entry. This transaction is a contra entry. It says we are deposit cash and we place it into the bank. So the money is moving from our business, which is cash, going into the what now? The bank. So the cash is giving it and the bank is receiving it. Are you coming with me now? The cash is giving it and the bank is receiving it. So because cash is giving it, and once we're giving something, we're going to go over here, the credit side. And we're going to have October 8th is, right? And the cash is giving it. So we're going to record the information just to make sure that is 3,500. The cash is giving it. Of course, we're going to have a C here, C representing contra entry, and bank is the name of the other account affected. We're not through because both bank account and cash account is in the cash book. So we're going to go to this side now and show that the bank has received that cash from the business. So we go here, which is the 8th again, and we're going to have now cash in here, details, C for contra entry, yes, and under the bank column we're going to have 3,500. Hope you've gotten that one. All right, so that is what? Contra entry. So the cash is giving it, so record the information on the credit side showing that cash, the money out of the cash column, yes, it's been given, and bank is receiving. So on the debit side we show that bank received it. All right, let's go to the next transaction. That would have been October 10. This transaction would have been October 10. We pay rent by check. The question again is the money going out or is it coming in? When we're paying rent by check, we're paying the rent by check. Is the money going out or coming in? All right, so the money is going out because we're paying for something. All right, so that's going to be October 10. And rent is the name of the other account, yes? And we're going to rent. Let's go now. Rent is an expense, so it is a nominal account. Rent is an expense, so it is a nominal account. And because the nominal account in the folio, it must be what? General ledger. GL. Right? We're paying by check, so we go to the bank, and the amount we're paying is $6,000. Next transaction, we paid C. Morgan on his account, $9,000, receiving 10% discount. Now, C. Morgan was on the 15th of October, and we are paying him, right? We are paying C. Morgan. So if we're paying C. Morgan, the money is going out, giving on the credit side. So we come the 15th. Yes, it is C. Morgan. All right. Now, what are we going to put in the folio? C. Morgan is not a real account, not a nominal account, but a personal account. And C. Morgan is not a debtor, but a what? A creditor. And if he's a creditor, we must what? Must be PL, because we're paying. If we are paying C. Morgan, it would have meant that we bought something from C. Morgan previously on credit. All right, so in this instance as well, C. Morgan is what now? Giving us 10% discount. We're paying C. Morgan and he's giving us 10% discount. So 10% of the 9,000, that is 9,000 times 10%, and that is going to be what? 900. All right, so those math who are slow in maths, we cancel out these two. 10 times 90 give us 900. So it's going to be $900 in the discount column, right? $900. Right? Now to see how much he's paying, we're paying him by check. So it's not cash, we just put placeholder there. 900 subtracted from the 9,000, and that is going to give us 8,100. Next transaction for Shellyan. Shellyan was on the 19th. So it says that Shellyan withdrew $500 cash for her personal use. We had indicated earlier that the fact that Shellyan is the owner of the business and she's taking the goods for personal use, it is joint. So the question is, she is withdrawing money from the business. Is the money business receiving or business giving? The business is giving. So we go remain on the credit side, and that would be again, what was the date? The date is the 19th. We're going to have drawings here. Drawings is a nominal account, so we're going to have GL, and it is she taking the money by cash, so it's going to be $500 here. Okay. Our final transaction, withdrew cash from the bank. Again, this transaction is a contra entry. It's a contra entry. At this time, the money is going opposite. We're taking from the bank is giving, and the cash is receiving. That's contra entry. So the same process we're going to do, record on both sides. So since the bank is giving, we're going to go here, and we're going to have what now? The date would have been the 20th, 22nd, 22nd. We're going to have the money on the bank, which is $1,500. Yes. See in the folder for contra entry, and we'll have cash here, showing that the bank is what it's giving. We come to this side, and we're going to have on the 22nd, we're going to have what now? Bank, because on C, and on the cash, we're going to have 1,500. So what we are saying here is that we took some money from the bank, so the bank was giving it, and the cash is receiving it. So we show it, because once we're receiving money, we record on this side. Once we're giving money, record on this side. Now our last objective should be to close, to balance off the accounts. Let us move to that quickly. What is the process of balancing off the account? Let me give some kind of space so we can have some more space here. Let me take out some of this, since we're not using all of it, right? We're not using all of it. All right, so we can do something down here. All right, So to balance off the account, now remember, when we thought balancing, we indicate that one side is more than the other, and we need to put something on the other side that is less for the account to balance. All right. So we're going to add the totals. So we compare the cash column here with this cash column here. Okay. Let's do that. So in this is 10,000. All right. So we're going to do our math. 10, yes, 380, 1,500. Ready? This is going to be 0, this is going to be 8, that is going to be 13, this is going to be, if that is 13, yes, this is going to be 2, and that's going to be 1. So the total on this side would be 12,000, what now? $380. Let's do the total here. It is 3,500 and then 500. The total then would have been 4,000. All right? So which side is smaller? This side is smaller for the cash column. So it means this is how the cash column would look like. Yes, or a cash account. Because this side is smaller, so it's lighter. Yes? So we're going to put the difference in it for it to balance. All right. So we subtract the 4,000 from the 12, right? When we take 4 from 12, we're going to have what? Is it at 8? Yes, 8. So it's going to be 8,380. Right? Okay, very good. All right, so on this side that is smaller, remember now when we're balancing off, we're going to use the closing balance. And the closing balance referred to as balance carried down, CD. For the last day, we're dealing with October. October has what now? 31, so it's going to be 31st, right? And we're going to have what now? Balance. All right, since for space, we're going to leave that and write CD, right? And then we're going to have this amount, which is the 8,380. Okay, that will make the cash account balance. We must do the comparison now with bank. Over here we have 50 plus 3,500, so it would have been 53,500, right? Over here we have 1,400, we have what now? 6,000, and we have 8,100, and we have 1,500. Let's do the math.